learn to an election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your Watchlist coming in at April 15th, 2020, and this is the greatest stock market dislocation in history. Okay, I might be a little bit dramatic about that, but what I am referring to is something interesting that we saw today with gold, or we saw it in the past. Gold had a huge day today. We're going to talk about that. I made some moves on that position, but then there is also what we saw with oil, so we need to talk about that. So we have a lot to go over. I have that. I have the earnings and a few other things I want to talk about, as well as 3 different plays that I want to make, or 3 stocks I'm pretty much buying. 2 of them I did not really like with the options. We went over something live on stream. We're going to cover that. But also one of them is going to be now the gold play that we made. So we need to go over that. Sold out of that $2,500 position. Took a small profit. I need to get back into that. And then we'll talk about even some of the news. Airlines today even got the bailout after hours stuff. So we got a lot coming up. And even though the markets have been slow, didn't make too many plays recently, there is still a lot of stuff happening, and we still got earnings, baby. I hope you guys are ready. Let's get right into it. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. YouTube.com/the stock market. Costs you nothing to join. All we ask is that you're positive and respectful. You could post the plays. You could chat. You could do anything that you want. Just positive and respectful, and you could learn something, hopefully. So hopefully we see you there. Shout out to all the people there, baby. Shout out to Chad, baby. I love you. And the most important thing you need to do, post your watches below. Let us know what you're looking at. You got any plays, comments, remixes, anything, post that below and source that information, especially here for earnings. And some of you are asking, earnings is going to be very important. We are going to cover every single earnings as it comes up. So we are really big into earnings. If you couldn't tell, I get really excited when we talk about it. But we're a little bit ahead right now. So we're just a little bit ahead of schedule, meaning these are the first sets of companies that we're getting. So it's a few companies here and there. We saw JP Morgan today, Wells Fargo, Johnson & Johnson. We're going to see a few more like Bank of America, Goldman, United Health tomorrow. But point is, we are very, very early. So as the earnings start coming up, we will start going over all of those. And actually, it was crazy. I copied this off this really smart kid in Chad. He posted this here. So this is a good lineup, but we're going to get it all for you. So you can see the 3rd week is what we're at right now. Pretty much the 1st week in a way, but you'll start seeing as we get to the end of the month, you're going to get bigger companies, and then it's going to really start get bigger as we get into May. So I hope you guys are ready. Shout out to you, Matt, baby. Shout out all of the people posting and sourcing info, baby. So let's get right into it, though. Right off the bat, I got the plays, all that, but this is this dislocation I want to talk about. First, it was gold, and then it was bonds, and then it was oil, but maybe it was oil first. So that probably doesn't make that much sense to you. Let me explain it. This dislocation I'm talking about is what you guys even saw with gold today. So you see here, this is the gold futures up here. Pretty much gold started to break out now. Gold even all-time high. You could even see we got GLD over here. GLD finally started to break out. We've been watching this and taking a look at this. But now, what dislocation am I talking about? Gold and gold futures, they're up near $1,800. You remember I talked about this about 2 weeks ago, a month ago. We started looking up on eBay. We were looking at gold, and the fact was any physical gold you wanted to purchase, it was already trading at $1,800, $1,900 an ounce when gold was already at like $1,500 an ounce. Or yeah, that's crazy. Gold was at $1,500, $1,600 ounce. There was a crazy premium. So that was the first level of dislocation, and then you saw it with bonds. You saw bond yields start to go really, really down when the market wasn't doing much, and these are the dislocations I'm talking about, and I'm pretty much saying this is a very unique time in history because we're starting to see this happen where the prices on the markets are dislocated from actually what is literally going on. And if this keeps widening, this is going to upset things like UUP and even then the markets. And now this is very unique for the markets because with earnings and everything we got right now, this is putting us at a unique situation because how are certain assets getting priced right now? So what makes me, why am I saying this? Because gold broke out today. Well, gold, it's starting to follow with the market. We've talked about this. You guys have heard me say pretty much after gold has this dip and everything, gold is going to start coming up when the market comes up or even as the dollar weakens as we've seen. But now the main key that we need to look at here is oil. That is what happened. I didn't mean to hit the horn, but let's go, baby. I'm sorry about that. If that blew out your speakers, I mean, I'm really do apologize. But oil hit $19 today, broke below 20. And why is this? What dislocation are we talking about? I said this is a wider divergence. The purple there is the Shanghai. But the fact that we're dropping again on oil, stock markets are bouncing, oil's coming down. This is a dislocation, but let's think about this real example of what I'm saying here. And this is showing us a little bit, like I said, give oil till the end of the week to really make a judgment on what happened at that OPEC meeting. But essentially, there's a piece of information we're missing that has nothing to do with the cuts. And this is relative to that physical price dislocation. So oil, and these are oil futures, it's trading at $20 a barrel. That's what it's selling at. And even though we got that OPEC agreement to cut a little bit, definitely not enough to match the demand drop. However, you still have Saudi Arabia willing to sell oil at a discount. And that is pretty much the newest piece of news and pretty much what you're kind of seeing reflected. But even though oil is trading at $20 futures, pretty much you could get a barrel of oil cheaper from Saudi Arabia depending on what country you are. So to the United States, it's one price. To Mexico, it's another price. To all the other countries, it's another price. And then to Asia, they're selling it to pretty much the highest places of demand, their biggest customers. They're giving a deep discount to the biggest markets. So even though there's an output limit, nobody said anything about the price limit. And that is what you have happening right now. And that is what I think is giving us a very, very unique concoction with earnings and price dislocations. Because now the question is, what is really the accurate price of now? This is good and bad. This is volatile because this could either mean things might have to catch up or you could be in for some rude awakenings. But pretty much a lot of things are prone to move, but also you see how long this process takes with gold. So we've got to see that through gold in the process, but that's the dislocation I'm talking about, and that is what I believe right here, right now, is the most important thing. So there's that, and then now at the same time, gold was telling us something today. Gold ran up like that. It was running up with the market, but pay attention to these days where the market and everything is relatively chill, but then you see certain safe haven type assets, gold or assets that shouldn't gain a lot, bonds, even oil, commodities, when they start to move today, it's telling you something. So don't underestimate even what we saw with the last few days with gold. It's moving a lot different than the stock market. And this is where we want to pay attention at these moments now when we're trying to move slow. We're still, there's a lot of risk reward literally at this point in the market, either on the way back down or on the way up, who knows? But when you're seeing stuff move very, very different, when a lot of things have been moving the same, and there has been divergences like we've seen in the NASDAQ, and tech stocks have held up better, but you see it, gold has moved dramatically different and a lot larger than the S&P. Now, it didn't have the same big days, but it kind of did. So keep that in mind, but keep in mind what all of this is telling you. And again, especially oil today, and now coming into even tomorrow, watch, even the end of this week, really watch airlines. They had a big move after hours. You guys saw UAL up on there on the charts, but what UAL is doing and all these airlines, let's see if this be government money, government policy that we could bet and pretty much ride the coattails of. That's what I want to see. I want to look out to see how these companies move. Let's see the premiums, but this is going to be definitely a point of movement tomorrow. And then watch healthcare stocks. Watch the continuations for earnings. UNH is going to report tomorrow, and then watch Cigna, Anthem, all those. I didn't finish that. Cigna, Anthem. Okay, yeah, you get that. But that is going to be important. I think that's going to be another area that will move a lot, and it's related to the biotechs and everything else, so that will be important. But that is pretty much it. I think it's still going to be excited as far as the markets. I still think in this early week of earnings, we're going to see a lot, it could kind of move us, but I don't think we're really going to move until some of these numbers come out. But with this great price dislocation in mind, really apply that to earnings and really think about that, because that means you might have some of these companies trading at a very, very different price than what they're going at. And I mean, even then, if you think about it too, even the Fed is willing to take collateral at a much higher price than it's really worth. I mean, you're seeing a very big, this is weird. And I'm telling you guys now, I was seeing this stuff. I was thinking about it. The fact we're seeing it all, and even just seeing the markets, we're not quite out of the storm just quite yet, but things are getting weird. And I think that's an inefficiency, and I think that is an opportunity. So I want to see that develop. And if you find something, let me know. But let us get into the plays. So the moment you've all been waiting for, and good thing we did wait till today. I should have sold in the morning. They were up 80%, and I didn't sell them. I said I was going to ride it out, but I got rid of the gold. The GLD, we sold the May 185s, and the whole point with that And again, I said I wanted to sell into strength and I said maybe I should have held it because we'll see. Test my theory right here. Watch those contracts. I said I'll probably get more on a red day. Maybe that could happen. Maybe if the market starts having a big down day and gold drops, but people rush into gold, the premiums might actually end up going up. So let's see. But I sold out of 50 of those contracts, got like $3,500 or something back. We spent $2,500 initially. Got out of that play. I said I was waiting for this day, and I said watch out for that 3-day run up. Said at any minute it could go. And why did I sell that? I'm not at expiration. I'm not in the money. It had a gain. It's because I still want this play. I'm pretty much rolling it over, but I'm taking advantage of time and I'm understanding. But I don't like to do this too much. It was just a bigger position and knowing the nature of what I'm buying. It's GLD. It is a commodity. It is an ETF, and it's linked to time, and it moves slow, and it's already had such a, look at this big streak and these big moves. I was only up 20%. That's because of how far out I still am from the money, and the expiration, May is actually, it's only 1 month from now. That was a lot different when we bought it back here in early March when that contract had 2 months of time. So we've already burned half of the premium on that contract. So what I want to do, I want to trade it in. Pretty much you could think of me as leasing this contract. I wrote it out for half of the time. I let it depreciate a little bit, got a little bit of gain. I actually was able to walk away not underwater. So I sold it out, got that 30%. And now what I'm going to do, if I sold out, I'm pretty much expecting contracts to depreciate pretty much on the next drop on gold when it happens, and again, it correlates even with the market. So we'll see, because if the market keeps shooting up, I don't know if gold will keep following it, or if the market comes down, gold should come down. I'm going to use that for my second entry, and then I'm going to pretty much use the same exact balance, the same $2,500. So even though I profited $3,000, just going to put the same amount of money I put in initially, and I'm going to go for a June or later contract with GLD. The idea is now I could have bought them today, and that the whole point is there's premium with these GLD contracts, especially the one with time. I could have bought them today, sold out, and just bought the ones with more time. But why didn't I do that? I'm risking opportunity cost, and I'm taking this time here now because I said I'll risk not holding a position in gold to hopefully get a better position. Because if I wanted to buy a June contract now for the similar price as 68 cents, I would be at $200 on the strike price. That's 30% out the money on gold. That's not really the best type of bet. Again, unless gold really just pops out and breaks out, but that's just not really the best strike. So what I'd want to do now is I'm hoping if it depreciates now and it's had this IV run up, maybe the contracts are up, people are expecting a lot with gold. If gold does chill out here in the next few days, maybe the next week, and things are still moving slow, setting up into earnings, then maybe that $200 contract, maybe I'll be able to get the 180s for June now at the same price I just sold out the Mays. So that would be the most ideal situation. That's what I'm aiming for. But if I do want a gold position, I'm going to buy another one with the same amount. I'm just selling out of that, just kind of riding, and this is how you play a slow type of mover. This is how I'm playing it. So you might see the same thing happen with UUP, but we're actually down on that. So watch how that one plays out. But there's that. Then the next one, these are the earnings plays I want to get. This earnings is coming up next week, and I was looking at them, but they're all up. And this is what we talked about with the premium. It's observing where you are at in the premium chart. And I brought this up even on the watch list yesterday when I was showing you guys the JP Morgan contracts. And this is what I was saying. These were those 110 contracts. This was the same contract that we hit 1,500% on. It's now down to 4 cents each after earnings. So this is why we like earnings both prior, and then you can see why people don't like it after. But look at this chart. This is premium, and you've seen this before. You've seen when a company even has, or a contract has, a crazy run up. Where are you on the chart is where I'm asking. So essentially, if it's already peaked and had a huge run up and now it's cheaper than that peak, you are on the right side of the chart. You are able to profit off of being on the right side of that chart. Hopefully you get this analogy that I'm working on. I'm just trying to keep it simple. But now if you're buying in, there's premium and it keeps going up, and it barely peaked. You could have been at here, but you're kind of coming off the peak, and it's the initial part of the run up. You're on the left side of the chart. The idea is you want to catch it and be on the left side of the chart either early or from the beginning. But when you start buying anything and the premium's inflated, that's where you'll get caught up. So you want to be kind of more on the right side. However, having a contract that shot up and then came down, unless it gets back in the money, it's hard for these right side companies to come back to life. So keep that in mind. So, or right side contracts. I keep saying companies. So this is what I'm bringing up, and now I'm giving you this as the play. I want this for earnings. I want to make an Intel play. Either June, I was considering May, but this is the problem I'm saying when we look at them. Like, let's say we take a look at 70. These are the ones we hit last time. You see, it already peaked, so you would have been here at the right side of the chart, but now we're either going to get, it's about to continue that trend again, and I don't like that. So you could even see, there's that peak. So you're at a weird spot. So there's premium, And the fact is, I know how earnings premium is going to move, but if there's too much premium built up, remember, like we said, if you buy the earnings premium too high before earnings, this premium was higher than it's ever going to get. It'll actually come down coming into earnings, and then that depends how the underlying stock moves. So I'm eyeing the Intels. I'm eyeing them on the call side first, and this is the strategy that we've been really doing, and I've said that on most of these. I'll buy calls first because usually coming into the earnings, people get a little optimistic. Usually they run up, and then I'll get the puts before the earnings or the day of or a little bit before. And again, you have to watch the earnings prices because they could still get juiced too. So that's what I like doing, but that's usually what I intend to do. But at the end of the day, you can get some short-term puts for pretty cheap, and that's how kind of I even like to play them too. With you get long-term on the upside with some of these plays, and you'll see right now I'm only doing the weeklies, but there's going to be a few plays I'm going to grab June, July, August contracts on the call side and then just get the short-term puts because then I could save money on that. But watch the premiums and understand you don't want to get caught up in a premium trap or on the wrong side of the premium chart on any of these plays. It will cost you a lot, or you'll just spend a lot for a low-quality play. So Intel, though, that's an earnings play I'm setting up for. I want it, and then even McDonald's. And then I shouldn't even tell you guys this because anytime I say them on so far on the watch list, they're just running up. I'm letting you know. So and I'm very, especially at this moment, I'm being very judicial with what I'm buying, and I'm just really just slow. I just drop the brakes really, really fast to the equivalency to which things have sped up. But I like McDonald's, so I like this one, or not McDonald's. Excuse me. What am I saying? Walmart. Excuse me. Did I put McDonald's? No, I think I keep thinking McDonald's, but Walmart. Sorry. Walmart. I said this yesterday. I want it today. It's the same position as those other ones. Even if you just look at any of the contracts, though, you could see here, you go on Walmart calls, Walmart's been a winner in all of this. Remember, identify the winners and losers, but you see all these contracts are peaking. You're on the left side of the chart, so we're either early to the party or you're going to get clapped. So that's what we have to watch out for, but I love Walmart. Again, extreme winner, and I'm simple, just calls on that one. They could go down, and pretty much what I think is going to happen is Walmart might even just run up into the earnings, and then earnings will come out, and it won't be as good as the priced-in expectation. It'll sell off, but still end up higher. So I'm just bullish on them. Again, they've just been a clear winner. It looks like they're doing good if there's any optimism. However, we'll see, man. The numbers will tell us everything. So again, that will be a very big opportunity for upsets. Hopefully you guys can see why. But those are pretty much it as far as the main plays I'm going to be looking at. But I still have a bunch of different companies I want to watch tomorrow. Again, airlines, I think that could be a good short-term flip play. That one might be one I could justify. You see, I said wait for plays with spreads and events. Never in history, I don't think, have the airlines been bailed out. So that's a big event. This is going to cost something. You could get in on it day one. Let's see. It sounds like I'm selling you already. It sounds like a pitch. Jeez. You could get on this on day one. But that's how I'm viewing it. So I would be okay putting down $50, $100 tomorrow, maybe a couple $100. We'll see. I want to see where it opens up at. But I like those. Watch UNH. And then, like I said, Anthem and Cigna off of the earnings, Intel, and watch McDonald's too. I like them. Some people say they got like a sexual harassment lawsuit. That's why I dropped. No, they dropped earlier today. They had a pretty big red candle on franchisees asking for rent assistance. And this could be something fundamentally that could affect earnings or this situation. I think that was a big hint. So keep that in mind because that could be a not systematic risk, a material risk to the company. We never really thought about how the interaction would be between franchisees and the company, and you're like, well, McDonald's is a real estate company, even though they have all this, but that's the whole point. That's an unforeseen liability that could just come out of nowhere if these franchisees are asking something. What would that do to the, it could change a lot, but earnings are probably going to give us that answer, and they're probably waiting to talk about that till earnings, so keep that in mind. But watch those. Like I said, I love Walmart. NVIDIA is a close second. Even Facebook. Facebook was really, really weird today, but Facebook was at an interesting spot, and I want to see whether Facebook or Snapchat reports early or even Google, and keep Google in mind. All these advertising companies and where they're at now and with how tech's been moving, I keep them in mind. I'm really, really actually interested to see how those play out. I think those could actually cause some big moves there. Watch Roku. They made a big move today. I forgot. I think it was like an upgrade and some other news report came out. So they moved a lot. Short term, I don't really like the news. However, maybe setting up in the earnings we could consider. I think we still have one of those older plays, but I think it's cash now. Watch Apple, but then JP Morgan and J&J. They had earnings today, and I was watching the J&Js. I was going to get the continuation. Those contracts went up out of nowhere. Watch them. The contract specifically on J&J and then JPM, you lost on both sides. We even lost on that put in that strangle. So that was an interesting phenomenon, more or less. But telling you something there about earnings, and you want to be able to observe the situations that happen. So it's not really a phenomenon, but it's so that you could see how these earnings are going to play out, but watch both of them tomorrow and the rest of this week. Continuations go beyond one day, and then Johnson & Johnson premiums were holding up extremely well, and we're gaining massive premium in the morning, so watch out for that. And then lastly, GLD, we're waiting for our second entry. I want to wait till it comes down. Those contracts get cheaper, and we'll be able to strike. TLT, UUP, we're still holding those, but then even HYG, watch them. They're a little interesting here with corporate bonds, and there's something with them in LQD and just TLT in general. But if we start to see more dislocations with what I'm saying, high yield credit is going to be next. So keep an eye out. We have those plays, and they're dead. They're down like 80%. They got time, but that is pretty much it. That is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need your helmet on. I need the armor shining, baby. Do not get caught up focusing on growth when you haven't learned to handle what you got. You got to master what you have and build capacity to handle more, baby. Do you really need growth? Really think about it. You might just have enough, baby. So I need your head in the game. I need you focused. I love you. The code loves you. Chad, everybody loves you, man. Everybody loves you. So go do something positive. The code loves you. I'm going to see you in the morning. Let's go!